Before we dive in, just a quick disclaimer, I am not a financial advisor. This video is for informational and entertainment purposes only and is not financial advice. Always do your own research and never invest in anything based solely on what you see on the internet. Now let's get into it. So guys, as I'm sure is the case for you as well, my portfolio has definitely been going with gravity this month. I'm currently down about 1.5% here in November. And zooming out beyond just our individual portfolios, it seems like investors at large are becoming increasingly concerned about the direction of the market moving forward. As we can see, the Fear and Greed Index, which is essentially a measure of how investors feel about the state of the stock market, has slid deeper into fear territory than anything we've seen in quite a while, and share prices across the board have certainly been a reflection of that fear. But the good news is this continued volatility is creating even more great buying opportunities that we long-term investors can take advantage of right now. And in this video, we're breaking down 3 stocks that I think are especially worth a closer look as we make our way into December, 2 of which I'm actively buying more shares of in my portfolio right now. Real quick though, before we get to those, I want to hear from you. Leave me a comment below and let me know which stocks you currently have your eye on. And also guys, if you want to see how all of my stock picks in this video series are performing, I put together a free public scoreboard where you can see everything all in one place. The spreadsheet tracks how all of my stock picks have done since mentioning them in these videos. And if you want access to this spreadsheet, just click the link in the description of the video. Now, I don't want to beat a dead horse in talking about Zoetis again, but this stock just cannot catch a break. Looking at the share price performance, we can see that in the last 30 days, the share price is down 16%, a crazy drop, and we can see it really fell off a cliff right here, which if we zoom out looking at the performance over the last year is going to leave Zoetis down about 31%. Now, looking at what this drop in share price has done to the dividend yield, we can see just in the last month or so, it's taken it from 1.4% all the way up to about 1.7, 1.8%. So a really big jump in dividend yield in a short amount of time. Now, while Zoetis' share price has struggled pretty much all year long, as we saw, the reason for the big drop this past month was because they released their Q3 earnings and the market did not like what it saw. The stock was down over 16% in one day just from the earnings news. And with that said, if you want a deeper dive into why the market reacted so strongly to the earnings release, I put out a video a couple weeks ago going into much more detail on that, and I'll share a link to that video in the comments below. Now, personally speaking, I think the market's reaction to the earnings release was way overblown. I think it was a huge overreaction, and I've been swooping up as many shares of Zoetis as I can get my hands on. Just this month, I've added 11.5 shares to my Zoetis position at an average cost of $122.18, which, as we can see, is way below the stock's intrinsic value estimate of almost $156 based on the discounted cash flow calculation, which means that the stock is now about 27% undervalued and looking like a very nice buy right now. And by the way, guys, that DCF calculation we just looked at came straight from investing.com's Warren AI tool, which is basically your own personal market analyst. And it's powered by real-time verified data that helps you automatically run these valuation models like the discounted cash flow. And speaking of discounts, investing.com is actually the sponsor of today's video, and they're running a killer Black Friday sale right now that I want to tell you a little more about. Investing.com is one of the world's largest investing platforms. It's used by millions of investors every day to analyze stocks, track portfolios, and keep tabs on what's going on in the market. Inside Investing Pro, which is their premium membership, you get access to a full suite of professional grade tools, including over 1,200 metrics, 14 different valuation models, and of course, Warren AI, which is hands down my favorite tool on the platform. As we saw a moment ago, you can ask Warren AI about any company and it'll instantly pull up valuations, financial trends, and anything else you want to know about the business in seconds versus the hours you would normally spend researching these things yourself. On top of that, Pro Picks is another awesome feature inside Investing Pro. It uses AI-driven data analytics to identify some of the best stocks across more than 20 different countries. Right now, there are more than 80 different investing strategies available, and a lot of them have outperformed the broader market, some even showing annualized returns north of 25% over the past decade, which is insane. The best part is that ProPicks updates every month with fresh data, showing you which stocks to buy, which ones to sell, and more importantly, why. With that, Investing Pro Stock Screener is another powerful tool that makes it easy to find the perfect addition to your portfolio. And there's even a section section where you can copy strategies from legendary investors like Warren Buffett, Monish Pabrai, and Terry Smith, so you can keep tabs on what the pros are doing. Right now, because of their Black Friday sale, you can get 60% off your Investing Pro subscription, plus an extra 15% off at checkout when you use the link in the description or in the pinned comment, or you can just scan this QR code right here. But either way, that's going to bring the total price down to less than $9 per month for the full suite of tools. This is their biggest sale of the year, guys. So if you've been wanting to take your research to the next level or just save time analyzing stocks, now is the perfect time to sign up. So definitely lock in that discount and start using Investing Pro today. All right, guys, now getting back to it, I think VICI Properties is another great buy right now. I'm putting my money where my mouth is with this one as well, and the share price has really seen a pullback. In the last month, VICI Properties is down about 8%, so a really big drop for this high-yielding REIT, and if we zoom out over the last year, it's going to leave the stock down 6.7%, so all of the losses and then some over the past year have come just in the last 30 days. And that drop in share price has taken the dividend yield from an already very nice 5.2% up to where it's at now, about 6.2% just over these last couple of months. So right now, you're really able to lock in a much nicer cash flow return than you would have been able to even just a couple months ago. Now, like Zoetis, VICI Properties also recently reported their Q3 earnings, but I think these numbers were actually pretty good. And I talked about this in a video a couple weeks ago, actually the same one I have linked in the comments, so I apologize if you've already heard this, but some of the highlights from the quarter were that AFFO per share was up 5.3% year over year, a really nice jump there. They also raised the dividend 4%, which was actually VICI's 8th consecutive annual increase, and they raised their full-year AFFO per share guidance just a little bit, implying about 4.6% growth at the midpoint. So as far as what caused the drop, I don't really think it was earnings related. I think there's probably some other things going on, and more specifically, I think the big catalyst for this recent drop, or VICI's poor performance over this past year, is really the poor sentiment surrounding Las Vegas, where VICI Properties has a really big presence. The rumor that's been going around, I'm sure you've heard it, is that Las Vegas is quote-unquote dead, and that negative sentiment does get priced into the stock, and analysts have certainly added fuel to that fire. Just a couple of weeks ago, Wells Fargo downgraded VICI Properties, citing concerns specifically about weakness in Las Vegas and also other regional gaming markets. But still, as a Vegas local, I can tell you firsthand that even though the numbers do show fewer travelers, the city is still very busy. There are still multiple millions of visitors coming every single month, with plenty of reasons to still come. Like this past weekend, for example, we just had the big F1 event and it was packed. Either way, as VICI's share price has come down below $30 per share, I've really been trying to take advantage of the opportunity to buy shares at these lower prices. And just here in November, I've added 32 shares to my position at an average cost per share of just about $30. With that said, Warren AI has VICI's intrinsic value at about $31 per share, which is about 7% above the current share price. So based on this, the stock looks to be pretty discounted right now. And personally speaking, I'm going to continue adding more to my VICI position at these prices, but honestly, probably not too much more because it already makes up about 9% of my portfolio's overall dividend income. So I don't want to go too heavy in that, and I need to curb my enthusiasm a little bit. You know, I feel like it's been a while since we've talked about Pool Corporation here on the channel, but I'm sure a lot of you guys have heard of this stock, if for no other reason than the fact that Berkshire Hathaway added it to their portfolio about a year ago. But in case you haven't heard of this company, Pool Corporation is the world's largest wholesale distributor of pool supplies, with around 450 sales centers around the world. And one of the things that I like the most about this company is the fact that over 80% of its revenue comes from recurring maintenance and replacement products. You know, things like chemicals, filters, and pumps, which are all essentials that pool owners have to purchase on a regular basis unless they want their pool to turn green, which no one does. Now, looking at the share price, Pool Corporation has just been getting pummeled. In the last month, the stock is down almost 20%. It's really fallen off a cliff, but looking at the performance over the last year, that's going to leave the stock down about 38%, so another very big drop there. Now, with that drop in share price, we've seen Pool Corporation's dividend yield go from a pretty low 1.5% to where it's at now, about 2.1%. So it saw a really big jump over these past few months. And even though that starting yield of 2.1% still really isn't anything super out of this world, definitely not as high as what we saw with VICI Properties, historically Pool Corporation has been a very solid dividend grower, and just over the last 5 years, they've increased their dividend by almost 17% on average, and we can see some really big jumps in these most recent years. But still, as far as the share price goes, it's really taken a beating, which actually is a good thing if you want to be a buyer of this stock. But but still, there is a reason for this substantial drop. Pool Corporation's latest earnings were the catalyst, and actually their earnings so far this year have been the reason. And while they look good on the surface for this quarter, a beat on both the top and bottom line, the year-to-date numbers tell a different story. If we jump over and look at the company's most recent 10Q, we can see that so far year-to-date, the sales are pretty much flat for the first 9 months of 2025 compared to last year. So no growth there. In fact, as we can see, there was a slight decline in sales year over year, and we do see a much bigger decline if we move closer to the bottom line. Looking at the net income, it's gone from almost $400 million in net income to about $375 million. And with that, we see the earnings per share go from $10.37 to just over $10. So we see a decline there as well. But still, as far as the dividend goes, while we're looking at this, it looks like they've paid out $3.70 so far this year in dividends. And with the earnings per share at about $10, you're looking at about a 40% earnings payout ratio. So the dividend at least is still very well covered. With that though, if we scroll down to the statement of cash flows, we see a really big decline in cash from operations. For the first 9 months of 2024, it was almost $500 million. Compared to the first 9 months of this year, it was only $285 million. So once again, a really big drop. But fortunately for them, they've still added a ton of cash to the balance sheet so far this year. It looks like they've added about $50 million, starting the year at about $78 million in cash on the balance sheet. And for the first 9 months, they've finished up at about $130 million. Overall, it doesn't really look like the company's broken, at least not in my opinion, but growth has definitely stalled. And when a stock like Pool Corporation, which has had a lot of future growth priced in over these past few years, but when we start to see some of these non-growth numbers, that's going to have a really big impact on the share price. Now, with that said, even with the sluggishness of this year, Warren AI has Pool Corporation's intrinsic value at about $350 per share, which is a whopping 46, almost 47% above the current share price right here. So there could be a lot of upside in this one if and when the company can move past its current slump. Overall, I think Pool Corporation is looking like another solid contender if you're in the market for another great dividend growth stock, and I think the same is true for all three of the companies that we've looked at today. With that though, there are still plenty of other stocks out there that I would love to buy, and I'm telling you about a couple of them in this next video right over here. These are at the top of my wish list of stocks that I will be loading up on if the market continues to sink, which actually wouldn't surprise me. But anyway, click right over here to check those stocks out, and I'll see you in the next one.